Good afternoon, everyone. Thank you so much for joining us. It's been a dynamic year for crypto, I think we can say, to put it mildly. But despite all of the risks and challenges we're seeing, there's still been a rush of traditional finance firms rushing into the space. So I think we have a great combination of panelists today who represent that bridge between TradFi and crypto and can really talk about what the future of the industry might look like, especially considering all of the operational challenges this space is facing. So I want to ask, starting off with that question, how you view that current trend in crypto, where you are seeing so many TradFi firms, whether it's from ETFs or custody or other services coming into crypto, and whether you think the future of the industry will be defined or shaped by traditional finance. Maybe, Rikhil, we can start with you.
Yeah, sure. And great to meet everyone. My name is Rikhil. I'm with a firm called Tarsadia Investments. We're a multi-strategy firm that focuses principally on fintech and Web3 investing. And it's a great question, Leo. Like, the way we've thought about it so far is we invest across traditional finance markets and blockchain markets. Is TradFi's participation in our world, in the Web3 world, is comparatively so much smaller than all of their other activities combined. I mean, it's still, we think something like sub 1% of TradFi's activity has migrated to Web3. So given we're in such early innings, we think it's very hard to say that they are or will be or will become dominant players in the category. So I think it remains to be seen. Over time, we could see them becoming material participants. And the only way this industry becomes big, I mean, we're right now, call it roughly $1 trillion or so of digital assets relative to 500 trillion of global assets, is if we see material TradFi participation. So call it, getting to 1%, a few percent of global assets is ultimately how this becomes a major industry.
Yeah, so hi, Angela Dalton from Signum Growth Capital. We, one side of the house, we're advisors to ARK Invest and the Web3 Foundation in Switzerland, and the other side of the house, we invest in gaming, media, entertainment meets crypto and AI. And so I'll just say my background prior to founding Signum in 2018 was 20 years of traditional finance. And I think that the traditional finance world is going to need crypto natives. And I think what Tracy said, I don't know her yet, but I would like to meet her. What she said earlier on the panel about this idea that traditional finance companies need to bring in crypto natives so that they can figure out how to move forward, I think is key. So I think it will be very collaborative, even if it doesn't look collaborative from the outside, because we're in a period now in terms of fundraising, which is a pretty tough period. That could change, but it's going to take a lot of capital to build these projects and companies and decentralized organizations into kind of a point where they can hit critical mass. And so I do think it will be a collaboration, and a lot of the capital will come from traditional finance.
Hello, everyone. My name is Hod Hirshman. I'm the co-founder of Merklebase. We power portfolio management and risk management systems in digital assets. And we work mostly with institutions, so asset managers, brokers, hedge funds, market makers. And I have to say that this question poses like this dissonance that I think exists. And if you look at some of the biggest traditional finance institutions that are powering this infrastructure that we all use, like FIS, they're collaborating with the Tel Aviv Stock Exchange and Fireblocks on tokenizations and using DLT technology. So I think I agree with the panelists here, and the world merges, and then the volume and the market capitalization kind of grows significantly.
As a follow-up to that, I think you can look at the benefits of what it means for TradFi to come into crypto. Obviously, more resources, more capital, the natural evolution of the space. But at the same time, the first decade of crypto, I think, was defined by its more rebellious nature, how it came to be. Obviously, we're here talking about risk profiles. I think a BlackRock is going to be less willing to be sued by the SEC than Coinbase probably. So I'm curious if you do think there are downsides or how it will shift, I guess, the fundamental nature or ethos of crypto if you do have more participation from the TradFi side. I don't know if someone wants to take that first.
I'll take it. I was talking to a C-level at one of the systemic American banks 2 weeks ago, and this conversation 6 months ago was very, very warm and hot about crypto infrastructure, and this last conversation was a lot more about AI. And when we talked about Web3, it was about the risks around security hacks, reputational risk about entering those markets and what consumers think about you. And so the conversation is just ridden with speed bumps and, check back in 3 to 6 months. So I think that the sentiment needs to change for bigger institutions that have reputational risk to want to align their functional capabilities with crypto.
I think the crypto rails are being built by crypto natives right now as we speak. Many of them, are not in TradFi yet, but having worked in traditional finance for many years, no one who is there now is going to feel confident in building this internally unless they have true expertise. And the only way they're going to get that is by pulling people in. So I think that even if it doesn't look like it's crypto native, I think it will be, because otherwise it won't work.
I agree with Hod and Angela's perspectives. I mean, there's definitely a lack of maturity in the space for traditional financial institutions to be able to participate. So we've been doing a lot of research in this area, and the way we've looked at it is that all of the software that exists today, and there's more than $200 billion spent by TradFi on software to enable their participation in traditional finance, all of that software needs to be built for the Web3 world. And today that market, including Hawborn, is a sub-billion-dollar market. So take from that what you will. This entire ecosystem of security, compliance, institutional trading tools, embedded finance capability needs to be rebuilt to accommodate blockchain capabilities. And that's some of what, I was chatting with someone who heads up digital asset strategy for JP Morgan. That's some of what the large financial institutions feel they need to be able to participate in the category technology to enable that participation.
So Hod, you mentioned that you had a conversation and people were bringing up the risks or the challenges with crypto. I mean, I don't think I need to list them that have happened over the past year, but obviously a lot of it's reputational or also the hacks that I think are endemic to the space. I'm curious for all of you what you see as those main operational challenges in crypto right now. And obviously you're here because you think the rewards outweigh the risks, but I'm curious why you think that's the case.
I think one of the biggest challenges for operations in crypto is visibility and really understanding the assets that you own or you're transacting with and what their behavior is today, historically, and what it will be like in the future. So the governance structures that belong to these tokens, they can issue rewards, they can do all these things. And if you are an institution that is going into digital assets because the valuations or the promise to make more money, you need to really align the functional capabilities for your back office. Otherwise, you're spending a lot of time understanding what you're doing in P&L and mark to market for things you didn't expect instead of growing. And that puts a real hurdle on adoption.
I think operationally, the one that always comes to mind from a gaming perspective, which is where we invest, is, as the CEO of Mythical always says, that gamers have the unique ability to lose their passwords every single day. And so it's very difficult to get kind of the general population onboarded to media, entertainment, gaming meets crypto without some sort of, just better user interface and security.
For both crypto and TradFi institutions, the biggest problem we see is one of identity. You have this trustless, anonymous system that needs to be interoperable with the traditional finance system that's heavily based on verifying identity. And so these two systems need some way of speaking to each other. Some of the problems have been solved around monitoring transactions and identifying fraudulent activity behaviorally, folks like Chainalysis are working on solving that problem. They can borrow off of a lot of the pattern recognition that's taken place in the TradFi world, but until there's some solution to identity, it's very hard for these two worlds to work together. And like we talked about previously, you need these two worlds to work together for the Web3 world to get really big.
I was just going to say, I know we're going to go into regulatory, so I won't even touch on the operational challenges as investors when you inherit tokens or buy tokens and how there's a lot there.
Yeah, well, we can talk about that next. And obviously, this is something that I think about a lot. I cover a lot of regulation, and I always think about for companies, there's so much uncertainty now with how you operate. I guess just as a first question, do you think we're just in a holding pattern with the current administration and regulatory landscape in the US, with obviously the way that the SEC and the CFTC and other agencies are looking at crypto? When you're operating in the space with that level of uncertainty, how do you weigh those risks, or how do you think about those risks? Yeah, Angela, maybe you want to start?
Yeah, sure. So I don't think we're standing still at all. I'm actually really encouraged by the fact that there is so much kind of, obviously you have the SEC and the CFTC on the regulator side, and we've seen other areas really kind of pop up their heads and say, wait a second, this is not working, so we're going to take charge. And we've seen the judicial side take charge in terms of, judges like Judge Torres who made a call, and there will be other judges that make other calls. The legislative process is what I'm really excited about, and I don't think that's standing still. We have both the market structure bill and in the House, the McHenry-Thompson bill, and then also the stablecoin bill. And I think that while many were quick to dismiss the market structure bill as a Republican-only bill that only had Republican support, I was excited to hear Richie Torres, Dem from New York, talk about the idea that actually the bill advanced in the Financial Services Committee with 6 votes from Dems, and that was the first time a bill had ever advanced that was a crypto-only bill. It's usually crypto is usually buried as part of a broader bill. So I thought that was really encouraging, and he also thinks that there will be a lot more support, a lot more voters than 6 in the stablecoin bill from the Democratic side. So I'm really encouraged by all the activity, and I think that the other thing that I'm excited about is the international side. So from having a lot of meetings with both the SEC and the CFTC, they're both saying something similar, which is that many countries are looking to international standards like FSB, IMF, IOSCO, and something's not working here in terms of regulation being actually set that gives people a path forward. So I think taking it up to an international standard is pretty exciting, and I think the U.S. is going to be very involved in driving that. So, I hate to sound just optimistic, but I see just so much activity that I feel like it's different than what we had.
Yeah, I think among big traditional financial institutions, we see gridlock, and they just feel like there needs to be clarity, and specifically the large U.S. banks, custodians, and asset managers feel like there needs to be clarity on some of these issues, because the overall size of the Web3 market is still a very small fraction of the broader finance market. So why expose the 99% of your business to risk in order to get 1% opportunity? The math just doesn't really make sense for a lot of the folks we're talking to. That being said, one really positive sign that we've seen is putting aside the legislative process, which different people have different opinions about, the actual folks administering the regulation, the SEC, FinCEN, et cetera, have been incredibly productive partners to several of our portfolio companies around the topic of how to productively regulate the digital asset world in a way that helps drive its growth and value in a legitimate way versus trying to crush the industry with regulation. So we see that as being a really, really positive sign. For example, we have a portfolio company called Brightvine that is putting mortgage-backed securities on chain. And we found regulators to be very productive counterparties to our discussions around how to make this a legitimate marketplace for a new type of tradable asset class.
We're definitely not in a waiting pattern. We're in a collaborative environment. Banks are meeting with regulators. Crypto natives are working with TradFi firms. And we have to give it some time for people to understand what Web3 is, how to regulate it. They have mandates. They've seen all these hacks. And, we're early stage startups or growth stage startups, so there's a burn rate involved, but it takes time to build a valuable product that you can bring to market and that people trust. So.
Obviously, there's things to be optimistic about, especially from the regulatory perspective. And we are in early stages when it comes to the sector. But it seems like there's still this existential overhang with the threats posed by agencies. And like you mentioned with Judge Torres and the Ripple case, it could really go either way. Like for a company like Coinbase, depending on how a judge rules, either their entire business model could be ruled illegal in the US or it could be sanctioned positively. And I feel like it's something not a lot of other industries have to deal with. And I'm curious about how you do weigh those risks every day. I know you said there's no waiting pattern, but it still must be something that you consider, especially maybe if you're looking abroad instead of really counting on the US being a market moving forward. So how you think about those dynamics for crypto when it comes to the regulatory risks?
There's regulatory risk, there's technology risk, there's new information. And I think that if your appetite is to take risk because you perceive that there's a reward on the other side, then it's your job to study up, know the ecosystem, talk to people, have constructive conversations, and then make informed decisions that you think are going to lead to that reward. And that's how I'd look at about every investment philosophy. Always remember, look at the people you're working with, their investment philosophy and their process.
We still are the lead advisors to the Web3 Foundation on the launch of Polkadot. So back in 2019, when the SEC said, come in and talk to us, we actually thought, oh, everyone's going to rush in and talk to the SEC. And that didn't quite happen, but we did have many meetings with the SEC over 3 years. And there is more, I think, there's clearly no law to stand on at the end of the process. So that's not great. Having said that, and that's why I think the legislative process is so important. Having said that, there is more clarity than one would think, or than we've heard about in crypto, because we already have, and actually Judge Torres, concluded that issuing tokens for the purposes of fundraising and delivering that token to the initial purchasers is, at least we know that is a security. There are a lot of other things in crypto that are nebulous, but I feel like I guess it's getting your head around what actually is clear is actually a lot of the battle. And having had a public markets background and capital markets, I have found that there are a lot of lessons from public markets, which around communications, disclosures, basic things that I think could really go a long way to protect investors, and just it's kind of a do the right thing that in traditional finance we take for granted. People generally do it, and in crypto they generally haven't. So I think that there's a lot to take of what can possibly work.
This technology, this ecosystem has some very inherent intrinsic value. While there are risks associated with it, we all would agree that blockchain technology is valuable. I mean, it's the security truth machine, and there's real value to how you apply it. The traditional finance system today is evidently broken. There's oligarchies, there's a lot of people excluded from the system, and this Web3 world offers some real solutions through inclusion, through trustless forums for finance. So if we think that this ecosystem is real and has value, how we're looking at the world as investors is that investing in software that enables the digital asset ecosystem is a very attractive proposition, because regardless of where regulators go, as long as the ecosystem will continue to exist and provide value to clients, customers, participants, then the software ecosystem will need to grow. And we also feel like that creates some ability to not, for example, bet on what the dominant L1 will be or what platform or technology folks will migrate to, but rather just to bet on the fact that the ecosystem needs to exist and software needs to serve it.
I think I have time for one more question, and I want to ask, continuing with this theme of bridging traditional finance and crypto. I'm curious because you all come from a background in traditional finance. When you're talking with your friends who are still in TradFi, who I'm sure are somewhat skeptical of crypto, and how do you describe it to them? How do you frame it to them? You've all talked about today how the rewards clearly outweigh the risks, but I'm curious how you talk about that with people still in traditional finance.
Overall, we are deep believers in blockchain technology, the promise of tokenization, and we've been on the front lines. And I have to tell you guys, the banks see this as the infrastructure of the future: stocks, bonds, currencies being tokenized, central bank digital currencies, and there are cycles and things involved, and we have to do a good job of security, but it's the technology of the future, and it's not about if Bitcoin is the future of money, but the technology underlying is going to create some crazy efficiencies, awesome opportunities, and great jobs, a lot of jobs.
I'll pick up on efficiencies. As a student of technologies, many technologies for many years, the efficiencies here are not, they're just unstoppable. This is an inevitable technology. And so it's going to happen. It's just a matter of whether or not people are going to be on board or not. And so what I say, and there are a lot, you're right, who push back on the idea, is, this is about democratization, financial inclusion, and this is about efficiency. And so it's inevitable, and I always advise people, talk to younger people. So I was telling these guys, my son wanted to mine Bitcoin when he was 11, and that's unstoppable. Talk to younger people to figure out where the world is going.
Yeah, I'll keep this short because I think I answered that question already, but it really comes down to the value of the technology as a security truth machine, and the fact that our current system is broken, and the fact that the Web3 finance world has solutions for the current broken traditional finance world. So I'll go back to the example of our portfolio company, Brightvine. The biggest financial crisis in our history, the 08-09 financial crisis, was caused by mortgage-backed securities. So if you can create a global decentralized ledger of all of the data of mortgage-backed securities and understand the quality of these securities, the amount of liquidity, data, transparency, and efficiency you introduce into that market could have averted the biggest crisis in our history. So many more examples like that.
I think I'd like to just add something to that. The fact that Wall Street will run their data on a server somewhere in Maryland 10 years from now is just crazy, right? And we're going to process all these transactions and manage them in Excel spreadsheets. So I think blockchain is the solution for that, right? And it takes cycles, it takes years.
Well, clearly still a lot more to talk about. Unfortunately, we're out of time, but thank you so much, everyone, for joining us today.
Thank you.